Hello, traders. It's 8:02 a.m. Chicago time on Monday, the 29th of April, 2019, the last Monday of the month. Hope you had a great weekend. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have mixed sentiment today. The S&Ps are trading. The S&P is trading just below their closing price. The Russell's up about 1.6 points or 0.10%. And then the rest, the Dow is up a point. The Euro stocks are up a point. Really, really flat overnight market after running up for a little bit. And overall, just a mixed bag today. There's no clear indication as to, given the Friday run up in the indices, again, risk on appetite. There's really no indication this morning as to which direction the market is leaning, or if anything over the weekend has caused a change. Not seeing that at all. So that's where we stand this morning. We also got personal income and PCE core this morning for March. PCE core came in at 0% versus 0.1 expected. Personal income came in at 0.1 versus 0.4. It missed. Personal spending, however, was higher at 0.9 versus 0.7. For the rest of the day, we're looking at a pretty, we do have a number out of Brazil, and we have GFK consumer confidence this evening at about 7 p.m. Eastern out of the UK. And then China is releasing its NBS manufacturing PMI. That's at 9 p.m. Also, China and the U.S. are still in talks over trade. How long has it been now? Uh, Quite a few months. These negotiations have been going on. That group must be getting some good food or something. They're just so there may be an interruption through something at some point, given the news flow. But overall, really expecting this to be a pretty quiet day today, and not much in terms of action, given how we closed on Friday. So excuse me. So normally I would go through and review my expected scenarios that I set out the prior day and go over them this morning. But today, what I'm going to do is just go over what has happened in general terms. There are some levels here that keep playing and playing and playing that we need to kind of keep in mind. We broke higher. We broke higher on a small gap here on the 23rd last Tuesday, and we consolidated into the close, and we set up this really tight consolidation. And if you recall, we essentially ended up with a double top in between these 2 days. The expectation was for the market to ride through and push into 42.25 at that point. This would have been last Wednesday right here. Instead, we ended up with a neutral day that finished down. The next morning we opened and we pushed lower. Now, my plan for this morning was a push into 29, 24, 75, 25, a pushback into the point of control, consolidate, and then continue higher to take out that double top and to tackle the 42 and a quarter. And we didn't see that at all happening on Thursday. Thursday ended up dipping much lower. The overall predicted range for the day was spot on, but the auction shifted lower in that it dropped by 10 points essentially. Instead of the anticipated turn at 29.2475, it went all the way down to 29.14 and a quarter, breaching or tagging our 15 quarter key area and then coming back up. The point of control from this balanced day last week ended up the Wednesday ended up shutting off buying and giving us this multi-top. So what do we have here? And this is the reason for the stock zone in this area. The stock zone is the gray bar. These gray bars are really important in that this is where I intend to interact with the market. If I don't see an edge in those areas, I don't trade. And on a structured setup, but I also have trades that are generated by that are based on the intraday levels that are formed by the market. And so um, what we have here is the point of control being right on top of this 3450. Look at the 3450. It is this pullback area from the rally day point of control, and then it's a double top. And then where do we do? What do we do? We test it again, and it continues to be a key area to watch. Do you see how that's formed? There seems to be quite a delay between me and the comments, but you can see how this area is formed up right there. Then we accept this as the most traded price. And it shuts off buying twice, puts in a double top, comes in the next day, well, triple top actually, right there, comes in the next day and puts in another top right there on the push higher on Friday. And then it finally breaches, giving us this low volume node, and we'll continue to watch it. That's going to be a key area for today. You see how that's happening? So the price action has been quite logical, uh, quite controlled lately. We have this top that looks something like this, and then we have this ascending line that looks something like that. And then what we're looking for is, does it break the top of this wedge, or does it break the ascending line, which would be quite bearish? We saw a similar kind of thing in crude, and crude had a huge move on Friday. It dropped 4 times its expected close to close range on Friday. So this is I'm not a pattern trader or anything like that, but we've got to pay attention to these things again. This area, this 34-ish area, 34, 35 area is something to watch. And I'm explaining to you why, as opposed to just telling you that that's how it is. So overall, the market's quite bullish and continues to push higher. The overnight session that carries us over into the overnight session, it was absolutely and positively dead overnight, even after the European Open, which occurred right somewhere in here, 2 a.m. Chicago time. And then we finally get some releases out of the Eurozone business confidence. The business confidence in the Eurozone had a consensus of 0.49, came in at 0.42. The market popped higher, believe it or not, and then came right back to the scene of the crime, and then has been holding below. So where are we now? We're below overnight VWAP, below mid at the point of control, and we are below Friday's high and right at Friday's close. This is where we are this morning on a profile that is quite balanced with a pretty good kurtosis there in the middle. Notice that the value area, which is from here to here, this is the value area for the overnight session. Pretty tight value area, and it looks incomplete to the downside. Like, imagine if more volume was to fill this, it would look a whole lot balanced than it is now. Not that that's a predictive thing, but it's we just need to recognize that it has a bit of a B shape to it. Um, right now in the overnight session. Notice the volume is quite low given recent action. 116,000 is fairly low. We've been trading a little bit more than that. This is actually in line with the historical norm for the overnight session. But for the recent past, this volume is quite low. The delta is negative as well, so delta and price seem to be in agreement. Although price has moved back to where the delta is on a relative basis would be at zero. There's some slight weakness there in that the sellers are more aggressive, appear to be more aggressive than the buyers are. Okay, so that's the recap and the rundown. Someone's asking about crude. Here's what crude looks like. Just one second. The chart is down here. Let me pull it over. Here's crude on a 15-minute, and this is what happened on Friday. So we had already dropped. Apparently, OPEC is going to support the fact that Iran is coming and Iran sanctions are coming online, and of course, Saudi Arabia, being Iran's main adversary, is going to turn the spigot up despite its mandate to raise prices and keep them at about $65, at least per the last meeting. They consider that a fair price. As Iran comes offline, Saudi Arabia is happy to turn on the spigot and push prices down, and that's what they did. You look at that profile, it's got three distributions, a trend day down profile, and we are imbalanced this morning in crude, but this is quite a move here from about 65.10 to about 62.28. Pretty big move in crude. Pretty interesting action over there. So let's take a look at what we're expecting for today. Today, I'd like to show you, the first thing I'd like to show you is this, what the overnight has produced. Oh, the overnight session was pretty dead, except for this spike up, as I said. Actually, the Eurozone business confidence came in down here. This spike up, and then we turned down, and we could see that the liquidity is a little bit higher. There appears to be more liquidity resting in the book on the offer than on the bid. But overall, the action overnight has been pretty lackadaisical. It's not really aiming for anything. So we are clustered, as you can see here. We are clustered at the prior high a day, the overnight point of control, the prior close, all in the same spot, which leads us into what we should expect for today, or what we can predict for today, which is a pretty quiet session. Is the key expectation for this morning. Okay, so let's adjust these colors. Up, up, up. So the primary scenario as we come in is again, we are right up against the prior close and so on, right against the prior high. The way this closed, by the way, the market almost could almost shift the point of control higher. It just didn't have the time to do it. This is an interrupted run up, and the push in the overnight market is not a surprise. This is when the market stops because the clock says so. There's a tendency for it, kind of like a train coming to a stop. It just doesn't stop immediately. It kind of slows down into a roll, and then it stops based on momentum. And that's what happens in the market at least 2/3 of the time. So we expect this to push higher and make that higher high. The next key area up I have is 29.45.75. Above there, 49.75. 29.46.75 is the high. The next key area up from where we are is 29.45.75, and then above there is the VPOC, and then 29.51.75. A lot of 75s in there. So this morning I'm expecting an open auction that takes out the high, pushes the overnight high, and then consolidates back into the opening print before testing down and ultimately pushing higher into this 49.75. Why? Because we have, as I had explained, we have broken out of this consolidation, and the market is really in an uptrend. The path of least resistance is expected to be to the upside, but um, given what where we are, given that it's Monday and so on, I'm not expecting a lot of range. So if we get anywhere between um, uh, if we get between 12 points, 9 to 12 points today, I'll be happy. Secondary is a test up that fails back as the market becomes responsive. So an open auction that tests higher, pushes the overnight high, impulses down, and then moves towards 34 and consolidates in here before testing lower and then finishing right in the range. So a poke above and then a drop. And then my job is to determine, is it the bias long, is the bias short, and then to find something to lean against with a reasonable stop, put the trade on, and wait for the market to tell us what it wants. Okay? That's it. I want to remind everybody that the recording for the Futures IO webinar came out, is on my Twitter and in the description of the video here. It's also on the TraderBite page on convergenttrading.com in case you're watching it there. But I invite you to watch this video. It's really important. It sets us up. My aim there, it's probably the most comprehensive uh, pre-release video I've done. I've really gone through the details of what the product specs are, the expected costs, why we should trade it, who should trade it, and I also include a sample trading plan template. Now, it's not a trading plan, so to speak. There's a different one for Convergent members that was released to the members, but it gets you thinking about what you should have put together. This product comes out next Sunday night. It's a week away, and it's really going to be an important product. It's not going to change how we trade immediately, but it is going to make a big difference for those who are learning or working, sorting out their edge on simulator, or for those people with a low account balance. This is going to be a really important advantage for you to trade it. So I suggest you look at that video. You look at that video, you can find it on twitter.com/futurestrader71 or in the description of this YouTube video. The link is right there. It's also on there's also a podcast version in case you need to hear it on the run while you commute or drive or whatever. Good luck today, and I'll catch you tomorrow morning. Take care.